Hello, everyone. My name is Manolis Finorilakis, the Community Manager of Patch of Land, and welcome to a real estate crowdfunding webinar and a presentation entitled Real Estate Crowdfunding for Entrepreneurs. We're very excited to present this webinar to you tonight. We just want to say thank you to the real estate investors of Florida out of Jacksonville and the Tropical RIA out of Palm Beach. This presentation is for your particular RIAs, and we're very excited to give you this presentation. Before we begin, I'd actually like to introduce our guest as well. We have Douglas Cochran, the SVP of Underwriting and Acquisitions at Patch of Land. And Doug, can you please introduce yourself to the audience?
Yes, hi. Thanks, Manolis, for having me on today. I want to say thank you to everybody at the local RIAs for inviting me as well. Again, my name is Doug Cochran, Senior VP of Underwriting and Acquisitions at Patch of Land. And a little bit about me. I've been in real estate for over 20 years. I started off as a flipper in the Boston market, doing condos and small multifamily houses. I then got into appraising. I was a licensed appraiser for many years. I was into originations for a bunch of years after that, and got into underwriting. And prior to Patch of Land, I was a project manager for a local real estate developer in the Boston area. We were developing ground-up construction of a 24-unit residential housing units and a 14-unit condo building as well. So I kind of had my hands in a lot of things over the years, and I've been currently with Patch of Land for about a year and a half, heading up the underwriting division.
Excellent. Doug, thank you again for joining us. You know, our audience is in for a treat. They basically have the head decision maker on all the borrowing that is done in the company. So if anyone who is watching right now has any questions, we do have a couple ways you can submit those questions. If you're watching through the actual Google Hangout, you will see a Q&A application that you can actually submit your questions into. You could also actually type your questions into the event link itself, because there is a little bit of a discussion thread there as well. So if anyone does have any questions, please do not hesitate. We will hold the questions until the end so that we can actually go through the presentation, because many of those questions may be answered accordingly. So without further ado, we're going to start going through the presentation, but I do want to acknowledge one question that came in early. Many of the members of the audience may have heard that on October 30th, the finalized rules of the Title III equity crowdfunding, which is the unaccredited investor crowdfunding bill, those rules were actually made final on October 30th, just about a week and a half ago. We're not going to talk in detail about that, because that was 685 pages worth of legislation, and I unfortunately just haven't had enough time to read through it yet. And Patch of Land right now does not plan in the immediate future to actually use that regulation, unless in the future we decide to go into equity, which that isn't in the cards, but let's just say we do one day. That would be something we would look into for the unaccredited side. But right now, because Patch of Land is a debt-based crowdfunding platform, we're only focusing in on the accredited investor Title II crowdfunding. So let me actually start sharing my screen here, and we'll just see exactly this presentation. All right, so as I mentioned, this presentation is entitled Crowdfunding Real Estate with Patch of Land. And what we're going to go through is just kind of the whole process from start to finish, give you a nice little overview of the actual crowdfunding process and how it works for real estate. And so really what's happening in the crowdfunding industry is that we're taking the traditional way of lending, and we're putting it online. We're using the internet to be the intermediary between borrowers who need funds for their fix and flip and buy, fix and hold investments, and investors who are looking for a passive return on that investment. And so we're doing what these other famous companies have done in the past. By using the internet, they've been able to actually disrupt an industry as well. patch of land is now doing that from the lending perspective in real estate. In a way, we're looking to become the lending club of real estate loans. And so what is crowdfunding exactly? It is an approach for raising capital for new projects by generally soliciting contributions online from a large number of unknown, unrelated people. And so what crowdfunding really is, and was made possible by, is by the 2012 Jobs Act, which was the law that is allowing for all this amazing lending and investing to take place. The specific rule that Patch of Land is using to help borrowers and real estate entrepreneurs access the capital they need to fix and flip is Regulation D, Rule 506C, better known as Title II of the Jobs Act. For those of you who are not attorneys, really all you need to know is that this specific regulation has allowed for the general solicitation of accredited investors, meaning individuals who make over $200,000 a year or have at least $1 million in net worth are now able to invest not only in real estate transactions, but they're also able to invest in startup companies and other organizations through the online method of crowdfunding. Now, just to make kind of a little bit of a clarification, to receive funds from any of these organizations such as Patch of Land, you don't have to be an accredited investor to actually get funds for your deals. So I want to make that clarification. You don't need to be an accredited investor to get funds for your fix and flip. You just need to be an accredited investor if you're planning to invest in one of the properties that we put on our website that is made available to those wealthier investors. And there's really two types. You got equity and debt. We're only focused on debt, otherwise known as peer-to-peer lending. And so this is a nice slide that kind of shows you the different side of the coin, equity versus debt. Again, we only really are doing lending at this time, and this is a good slide for you to kind of take a look at. Really, lending is taking off from the industry perspective because it's much more predictable. It's a traditional industry that has a lot of data points, so it's really gaining a lot of traction. Whereas equity is a little bit of an unknown return, longer term in nature, and it usually takes a while before you know if the deal was good or not. 4 to 5 years out, you'll know if it was a good deal or not. So, you know, we're more short term in nature, and we like to keep it that way. So why is it a game changer? As I mentioned here, the problem is that there was a disintermediation. Borrowers at the recession essentially got cut off from financing. They unfortunately were not getting the amount of funds that they had previously, and so it was a result of the housing crash. And so because banks were not lending, there had to be another way. So then in comes crowdfunding, first with what we're probably all familiar with. First came the Indiegogos and the Kickstarters of the world. Then, because of their amazing traction, the government passed the Jobs Act, and then came us, the real estate crowdfunding platform for debt. And so the problem of accessing capital was one of the major issues, and that was particularly why we got started, because we saw an opportunity to fill in that funding gap for the borrower and then also provide the return for the investor. And so that's really the problem we're trying to solve. And this is how we do it. We basically connect the individuals, the borrowers, and the investors. And then by using crowdfunding, we amplify the reach. Because we're able to just generally solicit to everyone through social media, through email, through our website, we're able to really find and reach a larger pool of both borrowers who need funds and investors who want to invest in those borrowers' projects. And so from the investor side, and I'm going to bring in Doug on the next slide because I'd like him to actually talk about the borrowers. But from the investor side of the equation, accredited investors, was about 8.7 million of them in the United States. And before this law, only about 450,000 were actively investing in these types of private placement offerings. Why it's incredible that now we're able to generally solicit these individuals is that we believe we can take the 450,000 who are actively investing and increase that into the millions, because now more people will know that they have access to these opportunities. And so these are who our investors are. And then from the borrower perspective, I'd like Doug to kind of talk about this. So Doug, from the borrower perspective, the individuals who come to Patch of Land seeking capital, can you kind of go over, what our criteria is and what our ideal borrower looks like?
Yeah, absolutely. So typically our borrowers that we work with, they have experience. We want to work with borrowers, and when we talk about experience, we're typically looking for a minimum of 5 deals in the last 3 years, something like that. We want to see people who have gotten their hands dirty a little bit, have a good understanding of their market and the process of doing a flip or at least the renovations, just knowing some of the local zoning requirements, permitting process, things like that. It just kind of shows that you have things under control. For younger developers, we encourage them to bring on a mentor or partner who has experience. Can be a general contractor who's been working for the last 10 years and knows construction, to bring them on as a partner, or somebody else who has significant experience to bring to the partnership. So we won't necessarily turn away somebody with a lack of experience, but we'll encourage them to find a partner who has that kind of experience that can take them through a project and get their feet wet with it. We want to work with the local RIAs around the country, and a lot of that is a learning experience and a education for these partnerships. So we look for that. So that's a major consideration. We also look at the exit strategy when we're looking at a loan. We want it to be a clear exit strategy with our borrowers. Are they going to flip it? Do they have an end buyer in place? Are they going to reposition it and maybe get conventional financing and hold it more long term for rental income? We typically want these entities also to be in an LLC. With the borrowers working as a guarantor of the loan. So we look at that. We look at the project themselves as far as just what the asset is and what you're going to be doing with the asset. So that's what we're looking for the most part with our borrowers. We just want to look at their experience. We want to see what kind of exit strategy they have, the type of products and assets that they're buying. Right now we're looking at our bread and butter over the last year was 1 to 4 families, and now we've expanded that out and we're doing commercial as well. We've already financed a hotel that turned into a Ramada. We've done mixed use, we've done office space, we've done multi-unit residential apartment buildings, larger ones, of 20, 30. I think we actually did one that was 300 units. So we're expanding in the scope of work that we're looking at and the type of assets that we're looking at. So that's a little bit about what we're looking for with our borrowers. Great,
and it really helps to know that, because from our perspective too, from Patch of Land's perspective, if you've never done a deal before, we're not your lender. We need to make sure that the individuals that we are lending to have a base level of experience. Did you say you like to see maybe 3 to 5 transactions a year for the last couple of years? Is that around what you like to see?
No, I said 5 deals in the last 3 years. That's typically what we want to see. This way we know, that they've been doing it for a little bit. They've done research into their markets. And like I said, they've gotten their hands dirty a bit. They've flipped a few properties. They understand, when you're doing a rehab, when you start knocking down walls, surprises pop up, and you know how to handle them, and you can handle the budgets and the little surprises that pop up. And again, I'll get to know the local zoning and permitting offices, and and being able to properly budget a rehab.
Got it. Okay, so I actually have to change my sales pitch when I attend events, because I thought it was 3 to 5 deals a year, but this is only 5 deals over 3 years. I had the numerical numbers right, just not the true numbers right. So I'll make sure that
you were close. You were getting close.
Yeah, exactly. I had the numbers there.
And again, that's a general sort of thing that we're looking for experience. We look also for equivalent experience. If you've been in real estate as a realtor, as a mortgage guy, as a contractor, things like that, you've been in the industry, you have a knowledge of it. We take that into consideration as far as the general scope of what somebody's experience is. So it's not just strictly that's a hard and fast rule, but that's a general rule that we're looking at.
Got it. Very good. Very good. And then from so I know that even though we're an asset-based lender, we're a hard money lender. From the borrower side of the perspective, we tend to look at a pretty good amount of documentation. And so one of the things that maybe people aren't used to is that if you're dealing with a purely asset-based lender, they might not ask to see your credit and things of that nature, but we actually do require that our borrowers have a decent credit score. And so what would the credit score requirements be for our borrowers?
For credit, we don't really have a FICO score minimum, but we do look at the individual lines of credit. So, because we think that really kind of tells a story. We've worked with borrowers who have 500, in the 500s credit scores, and it typically tells a story. When it comes to credit, we want to see clean credit in the last 2 years. So we want you to no bankruptcies in the last 2 years, no foreclosures, no mortgage lates on any properties that you have in the last 2 years. We understand people have issues, and if you've been doing this for a while, as many of our borrowers have, and you were working in real estate during the recession or prior to the recession, you probably ran into some issues, and we understand that, and we don't want to necessarily disregard your experience because of that. If you've had foreclosure or bankruptcies due to the recession in that time frame, things like that, and you've slowly gotten yourself fixed up, and you've improved your credit over time, and in the last 2 years that you're showing that you've got your financial act together and you're clean, we'll absolutely take a look at a borrower like that, especially when they have that kind of experience, because quite frankly, anybody who went through the recession and they had numerous properties or whatever, they probably had a few bumps and bruises along the way. So credit scores necessarily don't scare us. It's really, we really do look at each individual line of credit, and for us that usually helps tell the story. So we're willing to work with borrowers with that.
Excellent. And of course, if their exit strategy, however, is to buy, fix, and hold, meaning that they would want to refinance, then obviously credit is more important in that scenario. But if they're looking to, if they have experience selling properties quickly and they're trying to do a buy, fix, and flip, credit might not be as important in that scenario.
Exactly. And that's part of having a strong exit strategy, and that's something that we look at when we're evaluating a property and a borrower. If somebody has a 560 credit score and they're looking to refinance this out, chances are they're not going to. That's not a strong exit strategy, because they're not going to qualify for a conventional loan at that time. You typically need about a 620, 640 credit score in order to refinance out conventionally. So that's, again, having a strong exit strategy, and, a borrower who has a low credit score like that would probably benefit from just doing flips, and building up cash reserves and things like that. And then over time, increasing their credit score to be able to then, on a more long-term investment strategy, be able to buy and hold stuff and get things for cash flow. So yeah, I mean, that's definitely something we look at.
Excellent. And then, we'll get to the lending parameters a little bit later as well. But one other thing that I guess could be a qualification as well is the fact that we lend, whether it's on the acquisition and rehab, we do lend 80% loan to value, meaning that the rehabber must come with 20% down. Is that correct?
Well, a little clarification on that as well. What we do is we do, excuse me, we do 80% loan to cost. So we take the purchase price plus the renovation cost, and we'll finance 80% of that. So just a slight tweak in that calculation.
Got it. Okay. So yeah. So let's say the acquisition is 100,000, rehab is 50,000. You'll lend 80% of 150,000, meaning that they'll need to come with 20% of that 150.
Right. They need to bring 30,000 to the table when we'll finance 120 of it.
Great. And I've been asked this question when I was at events too. We don't really take into account equity in the property. It's always that 20% down cash. Is that right?
Correct. Well, if it's a refinance, obviously we'll take into account the equity that's in the property, for sure. If it's a purchase property, we're going to go off of the purchase price on the property. So in the scenario that you just had, $100,000 purchase, 50,000 reno will give you 120,000. So what you'll do is the purchase price is 100,000. You'd be bringing 30,000. Your base loan amount would be 70,000, and then we'll finance 100% in essence of the renovations at that time.
I see. Okay, very, very good. So then that clarifies it for me, because everyone always says, but what if the property is worth, more than that 20%? Which obviously it would be, because we require it to be 65 to 70 ARV in order to finance the property. But yeah, unfortunately, in order to protect not only the integrity of the deal, but also our investors, it just makes sense to have some skin in the game to ensure that everyone is just committed to the deal.
Correct.
Great. Okay, that's great. And we'll get to the lending parameters a little bit more as well. We'll just move to the next slide. So again, if I'm a borrower, how do I work with the crowdfunding platform? And so these are some things to consider. Are you looking for equity versus debt? In that scenario, you obviously would have to choose an equity platform if you want to do equity, versus us, who is a debt platform. It's important to know the portals. Because of the boom in this industry, real estate crowdfunding is really one of the hottest segments of the market. And so there's just tons of people who want to go out and create their own platforms, but there's been cases where these platforms have not been very credible, and in fact a lot of them are just for show. They haven't really done any deals. So you really need to be able to do your research on these properties and make sure your portal. I'm sure a pet peeve of yours sometimes is we're able to close in 1 or 2 weeks, but what really causes things to slow down is how much documentation and preparation is needed. So can you talk about that a little bit, Doug? Like, what is the single biggest holdup in our funding process?
Yeah, I think it is borrower preparation. As you were saying, we can close loans very quickly. We typically close loans within 2 weeks. It's part of our advantage with our for our borrowers, and we'll get more into it, I guess, is the pre-funding of our deals. But I think that from an underwriting standpoint, when we have a borrower who is very professional, very organized, and very responsive, we can move very quickly on our loans. So I think for our audience tonight, the biggest thing I can say is be prepared. Have your documents in order. We have an application to fill out the application fully. We have a list of documents that we require to be able to hand in a package professionally and on time in a quick manner. Makes the process so much easier for everybody. You know, for us, we're all about trying to work with our borrowers, and you know, we're big on customer service, and we can only do that just as far as our borrower allows us to. And you know, I think that the borrowers who are professional and are prepared and are responsive, those are the ones that move extraordinarily quickly, and they're always happy with our services. And those are the guys we like to work with, because it makes our job easier, and we know they're professional, and you know, those are the ones that get the job done quicker when they're doing their renovations. You know, it just shows experience and professionalism, which is key.
Got it. Absolutely. Now, from the investor perspective, and I think one of the best ways to do this is also to show people how it looks like from the accredited investor perspective. But again, you know, you have to know what you're looking for. Are you looking for equity and debt, long-term versus short-term returns, diversity? You know, do you want to focus on a specific region, or do you want to diversify and invest, you know, a little here, a little there, all over the country? Definitely not just you know, believing that the due diligence of the platform is excellent, which Petrolands is, but there's never a guarantee on any kind of security that an investment you're making. So I mean, you know, the beauty of crowdfunding is the transparency, which I'll show you all in a moment. So even if you see a loan that is having a lot of traction as far as funding is concerned, always review the documents. Don't just fall into that herd mentality that, you know, that always happens. Always make sure that you make the decision for yourself, and you don't take into account how quickly a loan is getting funded as an investment, because that's just asking for you know, asking for a potential situation where you just took someone's word for it and you didn't do your own due diligence. And then again, you know, that's the track record. So let me actually show you a couple things here, which I think would be interesting to show you. Number one, you know, one of the previous slides that we had talked about knowing your portal. And the great thing about Petroland is that we are extremely transparent. You know, since we started back in October 2013, we funded 172 loans, and you know, to this day, our investors have not had any losses. There has been no losses to this date. You know, is there going to be a loss one day? I'm sure there will be, right? Because we can't be 100% forever. But out of 172, you know, so far so good, and that's a credit to you, Doug, and your team for, you know, being good judges of character, not only on paper but on, you know, by dealing with the borrowers daily. So congratulations on this number.
Thank you.
Yeah. And so, you know, this is one way you could check a track record. If a platform is not publishing their statistics, then, you know, that could be a red flag. But here's how the investors see it. And, you know, this might be a good start to the conversation, Doug, to kind of tell people about the pre-funding process, because when people view our website here, when people go and click on the investments tab, what they're seeing is an already pre-funded property that is now put on our website and made available to the accredited investors so that they can earn a return. But, you know, by this point, it's probably been at least a month since the borrower has actually received the funds and started, like, you know, working on the property. Is that correct?
Sometimes. I mean, it just depends on our volume at the time and the deals that have closed. But sometimes deals get put up on the site fairly quickly, within a week of closing. Sometimes it's a couple weeks. I'm not in the I'm not on that side of it. I don't determine which deals go up on the site when. But going to our pre-funding, that's one of the specialties and one of the things that's makes us stand out from the crowd, if you will, is our pre-funding mechanism. And what that is, we originate our loans, we underwrite them, and then we bring our own money into the closing table. And then after it's closed, then we open it up to our crowd of accredited investors for them to then be able to participate in the investment. So a big plus for our borrowers is that they don't have to wait for their project to be put up on the site, get filled up by our investors, and then close. Because that can, depending on the size of the deal, that can take a long time. Fortunately for us, most of our deals fill up within about 24 hours. The quickest one we did was, I think just recently, it was about 9 minutes, which is pretty quick. Our investors do like our products. But on average, it's about 24 hours. The bigger loans typically take maybe a week, just because of the size and the amount to fill up. But that's a major advantage to working with patch of land, is our pre-funding mechanism to get our developers, our borrowers, to get to the closing table and get starting to swing hammers as quickly as possible on their projects.
Absolutely, and I mean, that's that definitely is a major advantage, because like you said, if we had to put their property up, I mean, yes, the investors are pretty hungry. I mean, they'll fund something relatively quickly, but we don't leave that to chance as far as how long it's going to take to close. Like Patch of Land uses their own pool of funds that they close with initially, and then what we see here is Patch of Land's true advantage over kind of a bit of over the hard money lending model. A traditional hard money lender will make a loan. They've committed that capital probably for close to a year. When we make a loan, we're basically only committing that capital for up to a month, because basically, like you said, a week later to 2 weeks later, we're putting this property up on the site, and we're being cashed out of the loan that we just made to the borrower. And instead of us earning this 11% interest rate that this Naples, Florida property is, and I wanted to find a Florida property since we are talking about Florida investors.
Yeah.
Now that this one has been fully funded, now the individual investor is earning the 11% versus us when we were holding it on our books. Hence, we've basically increased the velocity of our capital to then re-lend that money out to another borrower. So,
Right.
it almost creates an unlimited pool of resources, because as soon as we make a loan, we're getting our money back within a month or so, and next thing we're out using that same capital and deploying it elsewhere.
Yeah. Now,
So
also, just a point to make on that as well is, because Patch of Land is putting their own money into these deals, any deal that doesn't fill up on our site, we're still committed our funds to it. And I think that speaks in two different ways. One, it's telling our investors that we have enough confidence in this deal that we're willing to keep our own money in the deal. We've done our due diligence and our underwriting, and we feel very strongly about the deal and the borrower. And it also instills confidence in our borrower as well. That we believe in the project and them, that we're willing to keep our money in it. So it doesn't happen very often, but we're always, that's part of the game for us, is we're willing to, if we're going to close on a deal, we believe in it, and we put our money where our mouth is with these deals. So.
Exactly, and that is definitely unique. So I mean, and that's why the added level of assurance that we provide by risking our own capital is why we have to make the choice to say, if we aren't able to provide this to our investors and they don't take it, then we have to be okay with keeping it on the books. And so it passes our standards. But again, this is why when you click on this, for instance, I clicked on the Florida, this is why that regardless of us risking our own capital, you really should go through and review all this amazing information about the property. I mean, it's all here for you to see. You have the investment summary, you have useful links, you have the full appraisal and renovation budget here as well. And The appraisals are done by third parties. And so we are fully transparent. That will show you basically everything that we needed to make the choice to fund this loan. The investor, the accredited investor, has at their disposal to be able to also, decide, okay, I like how Patch of Land looked at this. I agree this is a good deal. Now I actually want to go ahead and make an investment. One thing I want to say about this in particular, Doug, because one thing I notice is, some people, and we'll talk about the cost of our capital. I'm sure that's going to be a question, but some people might say, oh well, I'm looking for a cheaper cost of capital. Let's say that that's something someone says. Well, what I would say to them is, if you could find it, great, but why not do your first deal with us if you're having a hard time finding it? Because basically, if you do one deal with us, you suddenly have a borrower profile on our website that shows everyone that your deal was funded by so many different investors who actually invested in your particular deal. If you go ahead and you do one deal with us, then your profile is on our site forever and can be used as a marketing ploy to essentially show other private investors that might be able to provide cheaper forms of capital that, hey, you want to know what my history is? Here's a deal that I did with Patch of Land. And actually, here's multiple deals that I did with Patch of Land if you need to see more than one. Now you could see that, I think you should loan me that $131,000, but, instead of this rate and this points, you should give me this rate and this points. So actually, in a way, I hope I'm not saying the wrong thing here, Doug, but to the people who feel that cost of capital is an issue, use us to then build your own private lender, network yourself.
Well, no, I mean, a valid point, but I'll also say, working with Patch of Land, we have a lot of our borrowers come back to us because they enjoy working with us. They see the ease of use. We get to know them and their projects and how they work. We see their success. We want to help build their success. And with that comes, recognition on the site, because a lot of our repeat borrowers, they're getting known by our investors. They know when they see, a certain developer's work that they're going to immediately invest in it because they've invested in 1, 2, or 3 of their previous deals. They did great work. They were on time. There were no issues, no extensions. The great borrowers, and we get updates of projects as they go along, pictures, videos, things like that. And our investors appreciate that. They want to be able to see their money literally working for them, and seeing the progress of these properties. And they get excited about it as well, just as our borrowers do. You start off with a property that's, kind of beat up. And, I think our borrowers have that vision of being able to, see the beauty behind what could potentially be an ugly duckling. And our investors, they love seeing the transformation of these properties. And we've seen some, gorgeous renovations. So our borrowers, they get a reputation, certainly within our office. We've got borrowers that, have been repeat borrowers, and, when they come in with a new deal, we're excited for them and we're ready to work with them and, see the transformation take place. I mean, it's for me, I know for myself, having done it enough times that, I still get a thrill out of it, and I like seeing that kind of stuff. So, a reputation is built, within the Patch of Land community. So,
yeah,
we'll have to put that for that.
Yeah, absolutely. And I mean, that is 100% correct. I mean, I've seen some borrowers are on their 7th property with us. So, people do come back. And speaking of that, I guess from our cost of capital perspective, like typically what interest rates do we charge borrowers, and what points do we charge borrowers? I know that that there's a lot of factors, including experience, credit, etc. So it would fluctuate from borrower to borrower. But can you give us kind of like a general guideline of what people perhaps in Florida can expect?
Sure. So basically, our rates range anywhere from about 10% to 14% to 2 to 4 points. Really depends on the deal. We have a scoring model that we work with, and it takes into account credit history, down payment, experience, where you're located, and several other factors that comes into putting together the pricing on a particular project. In Florida, as you saw in that last deal, that was an 11% deal. That's with a borrower we've worked with in the past. He's got a great track record with us. We love working with him. And I think all of his deals have been about 11%. So again, it kind of depends, again, on the total package. So it's hard to tell. I mean, a lot of deals in New Jersey and New York, a lot of those are more in the 13% range, 14% range. Again, it's kind of a regional thing as well that we take into consideration when we're looking at where the project is, what state it's in, is it a judicial, non-judicial, things like that. So that's all put into our scoring models. So yeah, really just depends on each individual and the project itself.
Great. And then from the points perspective?
Again, that all falls into the pricing model. So I don't remember exactly on the Naples deal. I think that might have been 3 points maybe, but I'm not 100% sure, to be honest.
Got it. Very good. So going back to this presentation now, we actually went over the platform a little bit so that you guys kind of were able to see how it works. And so we can kind of pass over these couple screens. And really what we're trying to do is we're trying to create a win-win-win partnership, partnering with borrowers to give them the capital, partnering with investors, and then partnering with RIAs, such as the Real Estate Investors of Florida, RIA, who really was the proponent of putting this together. And kudos goes out to Deborah for really requesting this webinar. We love to tell people how we do things, educate them on crowdfunding. So again, these are the type of partnerships that we love creating with organizations nationwide. And so I want to actually check to see if we have any questions now, because you and I, Doug, believe it or not, it's been 45 minutes. So I want to just see here if we do have a few questions, because we've gone very well here. So give me a moment. All right, let's see. I'm opening up the question and answers application as we speak. And we have someone from, we have a great question from Erica Salinas. The question is, does Patch of Land work with wholesalers? I can mention our referral program unless you wanted to mention something about that as well, Doug.
No, go for it.
Great. So from the wholesaler perspective, what we're going to be doing, and it's not just for wholesalers, it could be for realtors, for people who are around qualified borrowers, and we actually do have a higher level program for licensed mortgage professionals. But what we're going to be doing, and we have the process in place. We're just going to launch it soon. We do have a program that we can help with referrals on, and so what I can show you is a page here that we partnered with Jacksonville RIA on, and so this is the link that you should all use tonight if any of you are actually interested in submitting one of your deals. It's in the event link, but I'm sure that we'll be sending it out as well. This link right here is our partnership with Jacksonville, and Jacksonville will ultimately get credit for anyone who actually signs up through here. And so that program is still in the works. We're really only doing it with the RIAs at this point, but in the future, maybe in 2016 or something, wholesalers might be able to also participate in a program like this. But right now, it's really reserved for larger organizations such as the Jacksonville RIA. So that's one way that we'll be able to that we'll be able to participate. And another way that I'd like to kind of mention is that one thing that a wholesaler might want to use patch of land for is, instead of being the wholesaler, you can potentially become a syndicator. So if you have the information that this is how patch of land works, and somebody who needs the funding, they might say to you, if you could find me funding, I'll make you part of my LLC so you can get a piece of the action. And so you could become a syndicator by educating people on how to use the real estate crowdfunding process. So aside from a future opportunity to refer, really the way to play this is, not only are you the deal guy, but you're also the money guy. And if you could bring the money, then you should also be able to get part of the deal as a member in the LLC and having a little bit of an interest. Is there anything else you wanted to add to that, Doug, or is that about what you think as well?
No, that's pretty much on spot. I mean, we have done wholesale deals in the past. Where our borrowers were buying from a wholesaler. Don't have much of an issue with that.
Got it. Okay. So then that's another option. The closing is not an issue there then either. Then the whole statement. Got it. Okay. That was probably more so what he was thinking. or
Could have been.
Yeah. Great, Erica. Thank you for that. There's another question here as well. Deborah said, you mentioned partnering. Will that overcome the inexperience issue for you, even if the partner is not registered with you? So yes, Deborah, and actually I'll let you answer this, Doug, but I believe what Deborah is asking is, could a borrower with less experience partner with a borrower with more experience in order to get a loan from us?
Yeah, absolutely.
Yeah.
I mean, like I was saying, we're reaching out to a lot of the RIAs around the country, and we understand RIA groups are an educational organization where they have experienced borrowers, and those guys are the ones who are mentoring the newer guys, and the newer guys are learning, and that's what this organization's about, at least in part. We want to be able to, everybody needs a start. Everybody needs to know how to get rolling on something, right? So we don't want to discount somebody who has a great deal, but may not have the experience, right? So we're very open for them to bring on a partner who has experience, and hopefully within your RIAs, you're working in that capacity, that you're there to help, the newer guys get some experience and get under it, and sharing the profits or however you decide to work it. But that's how I started in the business. I had mentors that helped me out, and we split profits, and everybody was happy. Everybody worked, and I got a ton of experience, and that was the start of my real estate experience. So yeah, absolutely. That's a long answer for a short question.
No worries. It was a great answer, because I guess the way someone might want to structure that would be, the experienced person is willing to put their track record as the main source of getting the loan. So in return, maybe that experienced person might create an LLC where inexperienced people who don't have the experience but have the cash might be putting the 20% down in the deal. So or
even a portion of it. Maybe they're splitting the down payments or whatever it is, right? Yeah. But for the experienced guy, it's another deal that they can work and make some money. And for the new guy, again, they're getting their feet wet, they're making some money, and they're learning their new trade, right? So it's a win-win situation. So
yeah, it totally is. So it makes a lot of sense. And to answer your next question, Deborah, yes, it is best to sign up with the Jacksonville submission form that we just showed you. I'm sure Deborah will send that out after the episode to both the Jacksonville real estate investors of Florida and Tropical RIA. It doesn't hurt just to sign up and see what our underwriters say. We love educating borrowers on what our criteria is. So anytime someone wants to submit a deal to us just for us to assess, that would be perfectly fine. We have a really strong team. I actually visited the corporate headquarters in LA just last week. I got to meet Doug in person for the first time, even though I felt like I've known him for like years since we've done so many of these together. I also got to meet the underwriting team and the loan team, and everyone was like top notch. They were educating borrowers. A lot of this is education. So absolutely, please sign up once Deborah sends out that form. You could also see that on the event as well to submit your deal and your profile. I do want to look at a couple other questions I believe that may have come through. Let's see if everyone got in here. Okay, looks like all the questions were answered on the event page, and it looks like all the questions were answered on the actual Q&A. So I believe then really the last thing to do is I just want to show you the screen one last time to share with you where you can get more information and submit your deals. If you're watching on this Google Plus event page, all you got to do is look at the details section here, and you'll be able to actually review the presentation that we just went through if you wanted to look at it again just on your own through SlideShare. And if you needed funding for something, all you got to do is click on this link right next to Get Funding, and it pops up the submission form for our partner, the Real Estate Investors of Florida out of Jacksonville. The Tropical RIA will get credit as well, but because we only have one form, just submit everything in here, whether you're from Jacksonville or Tropical RIA, and we'll make sure that we track which RIA that's coming to accordingly on our end. So please just fill out this information, whether right now or whenever Deborah sends that out to everybody. Trying to see, there are a few more questions it looks like coming through. So let me just see what they are here. So we got great. There's a great question from Charlie. Charlie Delicio says, "What is the time frame for paying off the loan?"
Oh, good question. Typically, our loans are 12 months, interest-only payments. No prepay penalties. So, we typically issue out our typical loans are 12 months. And if anybody, finishes a deal in, 8-9 months and you've fixed it up and you've sold it, congratulations. You've saved yourself some interest and you move on to the next deal. So that's typically what they are, 12 months. Sometimes we'll write in a 12-month, or excuse me, a 6-month extension. Depending on the size and scope of the project that the individual's working on. So we try to structure deals. We want our borrowers to be successful, so we structure our deals for success and really work with our borrowers to make them benefit as best as we can.
And that's another great point. The fact that we've been able to give some borrowers a 6-month extension shows that we are not in the business of repossessing properties, and that's why on the front end we also ensure that the due diligence is done on the front end to ensure that there isn't a situation that arises where a foreclosure would be necessary. So really, I joke we're kind of like the friendlier hard money lender, where our business model really relies on our borrowers making good on their promise to do what they say they're going to do, because we've talked to them, we trust them, we believe in them, and we'll do what we have to do to make sure that they're successful, so that ultimately our investors get their money back and they're paid an interest rate as promised. So it's really a win-win-win partnership once again. Another question here is, I missed introductions. Where is Patch of Land's headquarters? They are headquartered in Los Angeles, California. I was about to say Las Vegas because I've been watching the World Series of Poker lately, but you know, they're located in Los Angeles, and they're right in Santa Monica area. Great. So I think that's the last question, unless there was anything else. Feel free to ask any last minute questions while I give kind of Doug the last word here. So Doug, we're running out of time here. So any last words for the audience?
Last words would be, you know, come to the site, check us out, register, so you can go through the site, look at all the properties, get a feel for the types of properties that we're looking for. We have a minimum loan amount of $100,000. We'll go up to about $10 million. You can submit deals through the site. We have a great origination team that's very responsive, and you know, we'll get on the phone with you and talk you through the deal and help you structure the deal again to make it a successful deal. But that's the best way to really, I think, get to know us a bit, is to go through the site and look at the types of properties and the deal structures that we do and the due diligence that we do, and to really see our transparency. You know, we're transparent to both our borrowers and our investors in all the due diligence that we do, and we're looking to build partnerships, you know, on both sides, both our borrowers and for our investors. So, you know, if you have any questions, feel free to reach out to us. If you have questions on originations, certainly reach out to originations at Patch of Land. You can feel free to reach out to me at doug@patchofland.com. But Manolis, thank you for putting this together and inviting me on again.
Absolutely, my pleasure, Doug. And just one clarification too, because I know semantics is important. We actually, this presentation was provided by the Real Estate Investors of Florida, out of Jacksonville, not the Jacksonville RIA. So I just want to make sure that's clear. This is the Real Estate Investors of Florida, led by Deborah. It is not Jacksonville RIA, which is a different organization. So please, I just want to make sure that everyone understands that. And everyone, thank you so much. Once again, thank you so much for your help. I just want to let you know as well that that Patch of Land is a preferred provider for the Real Estate Investors of Florida of Jacksonville, and we will be listed as such in their funding source directory. So Deborah, thank you very much for letting us know that. We're very happy to partner with you. And again, the Real Estate Investors of Florida and the Tropical RIA, thank you so much for attending tonight. The link that you have will also be the replay link. So if you ever want to watch this again, it'll be on replay immediately after the show. So thanks again, and everyone, have a wonderful evening.